Here, Digital Asset Summit 2025. I'm joined by my good friend, Ryan Connor, head of research at Blockworks Research. Ryan, thank you so much for doing a quick live Lightspeed with me.
Honored to be here. So one of my favorite podcasts.
It's good to chat when you're not just sending me unhinged Slack messages about AI at 2 a.m. So hopefully we can have a more civilized conversation.
Not possible. It's only going to be at the same level as I am at 2 a.m. reading AI blogs and sending you direct quotes from them.
Context for listeners is one time I dared question if the capital expenditures on AI are going to justify the returns. And ever since that happened, Ryan is really trying to prove me wrong. At this point, I don't even know if I'm an AI bear. I just keep taking that side because I'm too dug in at this point to like flip sides. I can't change my mind. So
10 straight months. About 10 straight months, I think, of unsolicited AI bull posts via Slack from me to you.
Yeah, exactly. But anyways, we have more serious things to get into today. Meme coins.
Yep.
Where I want to start out, Ryan, is news just broke from me, not to brag, that Radium is releasing a fork of Pump.Fun. So Pump.Fun, large Solana meme coin launchpad, has done, I think, over $500 million in revenue at this point. Very widely used app in Solana. Tokens that reach enough liquidity migrate to Radium, the automated market maker. Pump.Fun ended this informal relationship essentially when it began developing its own AMM. And so Radium said, hey, if you can do open source tech, we can do open source too. And they created their own meme coin launchpad. What's just your initial 2 cents on the news? I know there's a lot still forthcoming, but initial takeaway.
I think it all depends on who has the front end of meme coins today. I think that's actually the most important piece. It's not clear to me that anyone, I don't have data on this. I'm spitballing, but this is my feel as a meme coin participant and observing other participants and then seeing where the revenue is in crypto today regarding meme coins. I think that it's very fragmented. So, you're finding out the contract address and then you're going to either Moonshot or you're going directly into Phantom or you're going on to Pump or you're going on to Radium. It's not clear that anyone really owns that relationship. So I think that the front end is ripe for disruption, frankly. I don't know if it's Radium. Thinking about history of execution there, thinking about where they made their money, thinking about product velocity, it's not clear. I don't know. It's just I think it's a big unanswered question. As dominant as Pump Fund is, I was actually convinced of this the other day that Pump isn't actually consumer facing. They tried to be. They really tried to be, and they have the front end. But their core function is that they are a back end for meme coin generation, and then there's a lot of other platforms that are owning the front end. Gecko Terminal and Dex Screener kind of own that front end too, where they have the list of what's hot right now and the things that you can trade. There's some TikTok-y apps that are kind of popping up that I know that people are using. So they're a back end, and it's much easier to displace them, I think. Now, they tried to do their thing with the video social thing. I thought it was a great idea. Bumps in the road, right? They had to pull back the product. So I think bad timing for Pump in terms of it exposed Pump to potential disruption here, and Radium's taking a shot at it, and I think it's a worthwhile shot.
How much does it matter though if Pump is only a back end? Because Dex Screener, for instance, launched its own Pump Fund equivalent called Moonshot, I believe, and I don't think it has a lot of usage. It's not the Moonshot that the Trump team used. It's a different, very similar Pump Fund fork. So maybe Pump doesn't have the distribution on the front end, but they still get the swap fees and so forth. So, I mean, does it really matter if people aren't going to Pump to search for meme coins?
Well, it depends on how much work the team wants to put in. If the Radium front end if the Radium launchpad is leveraging Pump on the back and then Pump's fine, I don't think that there's anything in particular. There's nothing particularly important there as far as the consumer flow. And how you create these things. You can fork that and do it yourself. I think the one thing that I actually think it gives a token legitimacy is Pump in the token address. Pump owns that kind of real estate. It's similar. It's similar to a website where it's I know you could fork Facebook and you could have everything from Facebook go to a different URL and no one will trust it because the URL is not facebook.com, right? I think that actually looking at meme coin launches and seeing pump, it tells me something. Contract address is a part of the workflow. It doesn't look like anyone's looking to abstract it away today. Maybe it happens in the future, but I think that that's an important part of real estate, having pump in the address. Will it continue to be? Not sure.
Well, yeah, that's what I wanted to get into next. Is you mentioned before this you have some thoughts on incumbency. Is Pump Fund an incumbent at this point?
I think so, yeah. I do think they are. So like I kind of like chatting with the Blockworks team over the last 2 weeks. We're at DAS. There is a bunch of TradFi institutional service providers here. Everyone's bullish on crypto, much more so than crypto natives. Capital's coming, right? The floodgates have opened. Now it's going to take time for the capital to get here, but it's coming, right? You need stablecoin, you need market structure bill, whatever. You're seeing an inflection point in crypto usage. In 2024, over the last 12 months, there was more DEX volume than in the history of crypto in just the last 12 months. So you have the history of crypto dating back called the founding of Ethereum in 2015 to now. DEX volumes were higher over the last 12 months. And that, like, when that stuff happens, when there's a large inflection in usage, historically you see incumbents get solidified. So it happened in the PC market in the mid 1990s when you saw like PC usage was like, it was still growing very high year over year, but then it had an inflection upwards and it solidified Microsoft's dominance. You saw it in the search market in the early 2000s when year over year growth was slowing, but still very high. And then it inflected higher and it solidified Google's position in search. And then when you look at like internet services, Instagram's been around for like 10 years, 12 years. Facebook been around similar time. Google's been around for a long time. Like Qualcomm, AMD, Intel, NVIDIA, like when usage in internet really inflected, it solidified a lot of the dominant incumbents. And you're going to have usage inflection, like in usage inflecting in crypto. What's that going to mean for the incumbents? I think, it's a networks effects business. It's a liquidity driven business. When you go to trade, you go to trade where the action is. So like, it's just like a natural funnel to the places that are already in the lead. And I think perhaps Pump is one of those, but mostly for the L1s, I think it is where it matters the most.
Okay.
Right? L1s and L2s.
Is your thinking that the inflection point for crypto adoption is 2025?
Yeah, it's 25 and 26.
Okay.
It's 25 and 26 because just talking to the people here, like they actually need to see the laws changed. Like there's been signaling that the laws are going to change, but they actually need to see the government define, like, is a token okay via the market structure bill? Is there going to be a sandbox, et cetera? That's going to happen. It's going to happen within the next 24 months. There's rumors that Trump wants it to happen before year end. So like you're going to have that moment where that flood of capital comes to crypto and it's going to use the things that have the most usage and potentially solidify like their positions as the dominant protocols. Now, obviously it's like on a case by case basis, like there's a weird thing in crypto where a lot of teams are not commercially oriented. So you have to pick and choose. And I think there are some obvious choices there.
What, expand on that. What's commercially oriented? Maybe bonus points if it's in the Solana world, but
So Solana is commercially oriented. It has a culture of commercial orientation. It's been very evident since I've started following the ecosystem in 2021. They were thinking about crypto differently than other blockchain communities that are much more politically oriented, that are building for an ideology rather than a customer. That's a natural advantage in capital markets and in commerce, and I think I really haven't seen the players that are focused on ideology changing. So I would expect that the more commercial-oriented teams are the ones that are going to benefit from this.
Now for a quick word from today's sponsor. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible.
What about, I'm just thinking like in the Solana ecosystem, say in theory we see a large flood of capital to the Solana L1. Do you think that outlets like Jito or Jupiter have that same incumbency advantage, or is that still yet to be?
I do. I do. Jupiter's really interesting spot. It's like great UX. It aggregates all the things that you need. It has a fantastic product suite. Multi-product DeFi is something that most of crypto has slept on for a long time, and only within the last 12 months our team's trying it, and it's so obvious. Look at any bank on planet Earth. It does more than one thing. And for some reason in crypto, I mean, people got rich, right? Then they built one product, they built one feature, and they got rich on it, and they didn't need to build a multi-product strategy, right? But like the competition is heating up. It's critical to have multi-product DeFi, and Jupiter is executing at that on the consumer level, I think, better than most teams. So yeah, I think they're totally in that category. Jito is like deeply integrated in the Solana ecosystem. We like that token a lot. We think they're going to generate $150 million in revenue over the next 12 months. We don't see much competition in the block builder space. Maybe there's some fee compression if there's competing block builders, but like, you know, they're well-funded, hungry team, super sharp, deeply integrated the ecosystem, largest LST by AUM. Again, if you want to come into the Solana ecosystem as a fund and you want to get liquid staking yield, you're going to go with the most liquid option, which is Jito Sol today. Like that is an incumbency advantage. There's a strong flywheel effect to having that being the number one LST on Solana right now. So yeah, I think they definitely qualify.
Yeah, I think it's also something of an open secret that Jito hopes Jito Sol will essentially be an ETF, because LSTs actually solve some of your issues with adding staking rewards to an ETF, which is what Solana's pushing for. And I mean, it's in the SEC records. Jito went to Washington and was meeting with the SEC to talk about Jito Sol. It just released a report on Jito Sol. So I think that's kind of like not gotten enough coverage. Is they're not really hiding their intentions to me that they want like a Jito Sol ETF or something like it. I'm not sure exactly what the specifics would look like, but yeah.
I mean, like that's commercial orientation. That's incumbency. Jito's an incumbent. They're well connected. They have a product suite that's fantastic at just funneling people back and forth to the different. It's a self-reinforcing like product system. Each product makes the other product better, and they're like talking with politicians, and that's important. That's commercial orientation. Like perhaps I can't imagine people like cypherpunk people from other ecosystems wanting to talk to politicians because they don't like politicians. But there's a practical reality that you need to do that.
Yeah. So one of my takes from this conference so far, I was on the institutional track yesterday emceeing, and it felt like 40% of the content was stablecoins. Like people really wanted to talk about stablecoins. I want to get your take on stablecoins from like a business and cash flows perspective, because there's obviously benefits. It makes, money transmission cheaper for businesses and things like this. But I also think you can see a world where that just gets commodified, and stablecoins payments business doesn't actually produce cash flows very well, I wouldn't think. So what's the benefit of stablecoins to institutions, and like should cash flows mindful investors be looking elsewhere?
I think that it's really hard to invest in stablecoins, especially as a liquid token investor. I think money exchange makes sense, like at the on-ramp, off-ramp level. Not easy to get exposure there. I think that crypto gets stablecoins wrong, at least in like the way that like common like CT narrative. I think the core of stablecoins don't like really help a bank reduce costs. Like everyone says that they do, but in actuality, stablecoins represent a bunch of assets on a balance sheet that are not on chain. Right? They won't be on chain for the next 5-10 years. They're just not. Yeah. It's just not going to happen. Things move too slow. There's people get stuck in systems they don't like to change. It takes a lot to change at a bank. So what does it do? It actually adds an extra layer that you have to move around on top of the cost structure you already have. So it's not particularly interesting from a cost savings perspective. What it is interesting is from a net interest margin or revenue or profitability perspective. We all know how profitable Tether is. They are profitable because you give them $1, they go invest it in treasuries and earn 4.5% and give you none of that. And that doesn't 100% net interest margins do not exist in TradFi today. It's very rare to come across such high net interest margins. So they're very, very profitable. The problem is that they're very profitable for startups and not incumbents. So like Tether seized on the market because it could move faster than the big guys. Circle seized on the market because they were willing to take a little bit more regulatory risk. These big banks don't want to take that risk, and so they're going to be late to the game. And I think that's the interesting thing about stables. Now, like from an investment perspective, it's just really hard to get allocated to that. Like Circle's not going to do a token. I can't buy Tether equity, so yeah, it's hard. I think that there's room for perhaps a decentralized stablecoin, but it's going to be like, I don't know, it adds so much risk. Like I just look at Athena and I'm like, that's just a lot of you're just adding a lot of counterparty risk there.
So, I mean, the moment that banks do catch on and credit card companies and Robinhood and whatever starts launching stablecoins, it's kind of over for Tether's halcyon days, right? Like there's they lose their advantage there, and they can't just take that 4.5% and pocket it.
It is like what does exist is like your margin is my opportunity for challengers to Tether for sure. Like it's crazy that they don't that there's no interest sharing there. It's just because the competition hasn't arrived yet. I think they're going to fight that tooth and nail. But I think there are network effects to just having a single unit of account in your wallet, and then to confuse it with USDT, USDC, USDE, USD B of A, USD JPM, like it gets really confusing. Maybe there's an abstraction layer that takes care of that, as like all these are regulated in the same way. They have the same collateral backing them. Like maybe that happens. But yeah, like those net interest margins are too juicy. They have to get competed away. But I've been saying that for 4 years. I don't know how long that's going to last. There are some startups in the space, TBD. They don't have the distribution advantage. Tether has the distribution advantage. They have their coin on every chain. They're integrated to the centralized exchanges. Like, it's going to be a tough battle. But like, my expectation would just like Tether profitability comes down as opposed to Tether dramatically loses market share and doesn't change.
Mm-hmm. Something, Ryan, that you tend to be pretty well in tune with, I think, is cash flows. You have more of a TradFi background. As you look at businesses on Solana, Pump Fund, Jito, Jupiter, what have you, what impresses you from like a cash flows, like fundamental investment perspective?
The problem with like this conference, I mean, not the problem. The interesting thing about this conference is that it's not a problem at all. The problem is that like people don't know what's going on in our space. They really don't know. People know that Bitcoin exists. They know that Ethereum exists. And they know that there's this thing called Solana, but and they know it's big and they think it's legitimate, but that's about it. What they don't know is like, I was at a talk where someone mentioned that Solana in the over the last 3 months had annualized like $3 or $4 billion in like, call it sales top line. There were oohs and ahs in the crowd, and I saw people pick up their phone and write it down because no one knew, but like that's obvious to us. So I think that there are a lot of nice cash flowing like growth equity like tokens that exist in the market. There's a lot. I mean, there's probably 30 or so. Now, like a lot of them are a little like tethered to crypto markets, and that's a problem I think for TradFi investors. Like you're seeing what's happening with like Radium, for example. Like it's going to be highly correlated to crypto stuff. So we're not there. We haven't reached revenue stability for these things, right? The revenues are so cyclical. What's interesting is like what I'm seeing in DPIN, where you're starting to see like $2 to $5 to $7 million in ARR in these projects that have been around 12 to 24 months. And the people who are paying those companies for those services, who they're generating revenue from, those revenues are not tethered to crypto markets. If you pay Helium for your cell phone plan, the people paying Helium for the cell phone plan will not stop paying when crypto markets go down, right? They're just going to keep paying for their cell phone plan. The people who are buying RTK services from GeoNet, they are going to, it's like precision agriculture, right? Like they're going to pay based on like, regular GDP, not crypto GDP. So it's going to be much more stable revenue stream. I think over the next 2 years, you probably see like, I don't know, maybe start to see like 30 million ARR out of some of these D-pins.
Wow.
50? I don't know. And things get really exciting then because it's stable and it doesn't look like crypto. And then everyone here gets really excited about those businesses.
Which ones? Because I feel like outside of Helium, in my view, there's not a lot of examples of like tried and true D-pins that work as businesses. It's a lot of future casting.
Oh, 100%. Like, I think a problem, like so GeoNet, I think it's like 2 or 3 million ARR. HiveMapper is like 3 to 5 million ARR. I think some of the energy D-pins are sporting similar numbers. So there's something there. They can, perhaps in 12 months, they can really start sustaining themselves without having to raise too much capital. But like one big hurdle, I think, is just getting the customer comfortable that you have a token. And that's way harder 12 months ago than it is today. And I think 12 months forward, it's way easier. Corporate cycles are also pretty slow. Like, you look at these startups, they spend like, 5 to 7 years in like startup land, like gaining enough deals to like establish themselves as a business. Like we haven't seen that in DeFi. These things go from zero to a couple $1 billion valuations overnight and a lot of revenue. It's going to be a more normal cycle for D-pins. So it's just like something you have to watch over the coming months, coming 12, 24 months.
Now for a quick word from today's sponsor. Celebrating 10 years of innovation, Ledger remains the most secure hardware wallet for your Solana and logins, trusted by 7 million users and securing 20% of the world's digital assets. In recent years, Ledger has built a robust ecosystem of products and services, making digital ownership more secure and accessible to everyone. Ledger's newest devices, Ledger Stacks and Ledger Flex, feature the world's first secure touchscreens, making it easier and safer to manage your Solana transactions and coins. With Ledger Live, you can seamlessly and securely manage and stake your SOL. Alongside Ledger Stacks and Ledger Flex, Ledger introduced the Ledger Security Key app, a safer alternative to traditional passwords, enhancing your overall digital security. Thank you to Ledger for making today's episode possible.
We haven't gotten very specific on data, but I know that's kind of where you spend your days. So leave us with just something interesting you've seen in the Solana data lately.
Yeah. So I'm a pump fund bull. I'm a meme coin bull. More so meme coins as a product rather than like owning all of them and hoping that they all go up. I think that they're meant to go to zero a lot of the time. So it's like a fun game. But there's like a big part of our data push and the new data product is like data's missing in crypto and narrative dominates the conversation. And often narrative is nonsense. It's just a game of telephone and we're all just making things up and trying to like push a narrative. The narrative lately has been that meme coins are dead, right? Luckily, like I think a few years ago, you couldn't really challenge any narrative. Like it was hard to get the data. We have revenue and fee data for every application. So, when we do that, we can see like market share of total fees and revenue in the market. Like where are people spending their money in crypto? And at the height of the meme coin bubble or meme coin activity, Pump Fund represented 17% of all revenue in crypto. Pump Fund is now dead, and it represents 12% of all revenue in crypto. So, like, for the folks who are saying, like, meme coins are dead, like, why is Aave and Aerodrome revenue down in the same percentage terms as Pump Fund revenue? Is lending and DEX dead as well? Like, they don't match, right? Like, if Pump Fund is if meme coin activity is really behind us, you would expect the 99% drawdown that you saw with NFTs and then like no recovery in terms of revenue market share, which is not happening with Pump. It's still the dominant app today in crypto markets. And we have that data today. So like anyone espousing the narrative, just go to Blockworks Research /analytics, and you can see like that time series, and you can we can I don't know, use the data to inform the narrative going forward now that we have it all.
So Pump Fund is dead, but so is everything else, is basically the...
Yeah, if you want to think in absolute terms, for sure. But like, I think they generated, since the Libra collapse, they've generated 48 million in revenue. Base has generated in total, like all the apps on top of Base, 24 million in revenue over that same period.
Wow.
Like Pump is earning, since Pump died, it has doubled the revenue of all Base apps. Like, that's astounding, right? It's missing from the conversation.
Yeah, I've long thought that was just the way our brains work is you see a chart that goes down and you think it's negative. But if you look at Pump Fund's activity today relative to September, August of 24, which is not very long ago, and also a period of time where people still felt optimistic about markets and things like that, it's double, I don't know, something like that. So, I tend to agree with you there. Well, Ryan, glad we could put our differences aside for a day and just have a civil conversation here. Maybe we'll do like a AI argument for the Patreon subscribers or something.
We need it. I want to talk AI
after this. But yeah, thank you so much for joining. Digital Asset 25 live.